This is Wallet Brief, where we break down what actually moved the U.S. economy this week, without the noise. If prices, interest rates, jobs, housing, or taxes are quietly changing your money, this is where you stay informed. Let's get into what really happened this week, and what it means for your wallet. The January jobs report released in mid-February showed the economy added 130,000 jobs, beating expectations but revealing a massive downward revision, showing nearly 900,000 fewer jobs were created in 2025 than originally reported. Monthly job gains in 2025 averaged just 15,000, far below population growth. Economists called it a hiring recession. Companies weren't firing en masse, but they also weren't hiring. Layoff announcements in January hit their highest level since 2009. By late February, the question was whether the labor market would stabilize or deteriorate further. On Thursday, February 26th, the Department of Labor reported that initial jobless claims rose by 4,000 to 212,000 for the week ending February 21st. That's below market expectations of 215,000 and remains firmly below averages from the last 2 years. The 4-week moving average ticked up slightly to 220,250. Continuing claims, people still collecting unemployment benefits, fell by 31,000 to 1.833 million for the week ending February 14th, among the lowest readings in 10 months. The insured unemployment rate held steady at 1.2%. These numbers suggest that despite all the headlines about layoffs, most workers who have jobs are keeping them. Employers aren't aggressively firing, but they're also not hiring. The labor market remains in what economists call a low-hire, low-fire state. Beneath the surface, the tech sector tells a different story. So far in 2026, over 130 tech companies have laid off more than 51,000 workers, averaging 870 people per day. That's 30% higher than 2025's pace of 674 people per day. Amazon cut around 16,000 jobs in January. Meta laid off 1,500 employees from its Reality Labs division as it shifts investment away from the metaverse toward AI-enabled wearables. Block, the financial technology company founded by Jack Dorsey, announced it will shrink its workforce by nearly half, from 10,000 employees to 6,000, citing AI tools that allow a smaller team to do more. Cisco cut 6,000 jobs after eliminating 4,200 in February. eBay laid off 800 people. Oracle is planning up to 30,000 cuts, and Dow Chemical announced 4,500 layoffs. AI is the primary driver. In 2025, companies directly cited AI in announcing 55,000 job cuts, more than 12 times the number from 2 years earlier. A recent survey found that 55% of U.S. hiring managers expect layoffs this year, and 44% anticipate AI will be a top driver. Companies are under pressure to demonstrate gains from years of AI investment. That means jobs being replaced with artificial intelligence. The labor market is caught in a strange paradox. Low jobless claims suggest stability. If you have a job, you're likely keeping it. But tech layoffs and the hiring freeze mean finding a new job is harder than it's been in years. Economists describe this as a jobless expansion. The economy isn't collapsing, but it's not creating enough jobs to absorb new workers entering the labor force. The trend is fragile stability, not recovery, not collapse, just a slow grind. If you're employed and not in tech, your paycheck is probably stable for now. But don't expect a raise. With labor supply exceeding demand, you have little leverage to negotiate higher wages. If you're looking to switch jobs, expect longer search times and fewer opportunities. If you work in tech, retail, or transportation, layoff risk is elevated. If you're in healthcare, demand remains strong. Overall, job security feels shakier than headline unemployment numbers suggest. The next major test comes Friday, March 6th, when the February jobs report is released. That will show whether January's hiring pickup was real or a one-time blip. That's your wallet brief for this week. These changes don't always make headlines, but they do change how much you pay, save, and earn. We'll be back next week with the updates that matter. Until then, stay informed and protect your wallet.